NVIDIA is one of the most talked about stocks in the world. Some investors believe it represents the future of artificial intelligence. Others think the stock has already gone too far. Today, we're taking a deep dive into NVIDIA. The business, the growth drivers, and the risks. NVIDIA didn't start as an AI company. It originally focused on graphics cards for gaming. But that's no longer the main story. Today, NVIDIA sells computing power. Specifically, computing power for artificial intelligence. And global demand for AI is accelerating. Modern AI models require massive amounts of training. That training requires extreme processing power. And most of that power comes from NVIDIA chips. As AI adoption grows, demand for these chips grows. More demand drives higher revenue. And higher revenue fuels further innovation. NVIDIA's technology powers massive data centers. It trains large language models. It supports autonomous driving systems. And it accelerates scientific research. Very few companies touch this many industries. Even fewer dominate their category. NVIDIA generates revenue from multiple segments. But one area stands out the most. Data centers. This segment has overtaken gaming. It now represents the majority of NVIDIA's revenue. And it continues to grow rapidly. Cloud providers spend billions each year. They compete to build faster and smarter AI systems. And NVIDIA supplies the infrastructure behind them. When companies compete, NVIDIA sells the tools. That creates a powerful business model. NVIDIA's data center chips are considered industry standard. They are optimized for AI workloads. And performance matters more than price. Training AI models is extremely expensive. Even small efficiency gains save millions of dollars. That gives NVIDIA significant pricing power. This is not a commodity business. It's a performance-driven business. And NVIDIA leads on performance. Here's something many investors overlook. NVIDIA is not just a hardware company. It's also a software company. CUDA is NVIDIA's software platform. Developers build AI systems using it. Once they do, switching becomes difficult. That creates customer lock-in. Lock-in supports long-term revenue. And long-term revenue supports valuation. Before we continue, a quick disclaimer. This video is for educational purposes only. It is not financial advice. Always do your own research. And consult a professional when needed. Now let's continue. NVIDIA's profit margins are unusually high. Especially for a company that sells hardware. This reflects extremely strong demand. Customers are willing to pay premium prices. Because alternatives are limited. And performance is critical. High margins generate strong cash flow. Cash flow funds research and development. And innovation keeps NVIDIA ahead of competitors. This cycle reinforces NVIDIA's leadership. Of course, NVIDIA is not without competition. Rivals are developing their own AI chips. Some aim to undercut on price. Others design custom solutions for specific workloads. But matching NVIDIA's performance is difficult. Especially at scale. NVIDIA benefits from experience. From software integration. And from constant iteration. Competition may slow growth over time. But it hasn't stopped it so far. There are also geopolitical risks. Governments increasingly view AI as strategic. That can lead to export restrictions. These restrictions may limit certain markets. And add uncertainty to future revenue. This is a real risk investors should understand. Valuation is another concern. NVIDIA trades at a premium. The market expects strong growth to continue. If growth slows, the stock could decline, even if the business remains strong. That's the risk of high expectations. Great companies can still be volatile, especially when optimism is elevated. Despite this, many investors remain bullish, because AI adoption is still early. Most industries are just getting started. Healthcare uses AI for diagnostics. Finance uses AI for risk management. Manufacturing uses AI for automation. All of this requires massive computing power, and NVIDIA supplies much of it. The long-term bull case is simple. AI becomes foundational to the global economy, and NVIDIA remains a key supplier. The bear case is also simple. Competition increases. Margins compress over time. Reality will likely fall somewhere in between. But even that could mean meaningful growth. NVIDIA is not a guaranteed investment, but it is central to a major technological shift, one that could define the next decade. Understanding the business matters, not just the stock price. And long-term outcomes depend on execution. That's our deep dive into NVIDIA. If you found this helpful, like and subscribe. Thanks for watching Digital Wealth Code.